Hey everyone, welcome back to Corporate Dakota, the place where we uncover the secrets hidden in plain sight within company filings. Today we're diving into Great Elm Group's latest report, and let's just say things got a little more interesting with some new stock and warrants being issued, kind of like adding new players to the game right before a big match. So what's the big news with Great Elm Group, or GEG as they're known? Well, on August 27th, 2025, they announced they've entered into a significant deal. This isn't your everyday shareholder update. This is about the company bringing in some serious cash by selling off a chunk of its stock and giving out warrants. The core of this announcement is a securities purchase agreement. Think of this as a formal contract where the company agrees to sell a specific amount of its stock to a buyer. In this case, Great Elm Group sold a whopping 4 million shares of its common stock. They're calling these the shares. Now, this wasn't just a random sale, it was at a price of $2.25 per share. This price was actually based on the average stock price over the previous 20 days, which is a pretty common way to set prices in these kinds of deals, to make sure it's fair for both sides. This whole transaction brought in a total of $9 million. Now, that's a decent chunk of change, and it was done through what they call a private. This is usually done to speed things up, and because it's exempt from some of the more complicated registration rules. But it's not just about the money they got today. The agreement also has some long-term implications. Great Elm Group has promised to file what's called a registration statement. This sounds complicated, but it's essentially a way for the company to make it legal for the buyer, Woodstead Value Fund, to sell these shares to other people later on without running into any legal trouble. They have to do this within 150 days of this deal. This is a really important promise because it means the buyer can eventually sell their shares freely on the open market, which is good for them. Here's where it gets really interesting for us following the company. As part of this deal, if Woodstead Value Fund continues to hold a certain amount of Great Elm Group stock, specifically 2 million shares, the company has agreed to appoint one person chosen by Woodstead to its board of directors. Not only that, but they have to keep nominating that person for re-election as long as Woodstead meets that ownership requirement. This is a pretty big deal because it gives the major investor a direct say in how the company is run. It's like giving a key stakeholder a seat at the strategy table. And guess what? That's already happened. On August 26th, the very day before this report was filed, the Great Elm Group board elected Booker Smith as a new director. He's starting on August 27th and will serve until his replacement is chosen or until he leaves. The board has already decided that Mr. Smith is an independent director, which means he doesn't have any immediate business ties that could conflict with his oversight duties. Mr. Smith brings a lot of experience in corporate credit and real estate investing, which could be very valuable for the company. He'll be paid according to the company's standard program for directors who aren't full-time employees. But wait, there's more. Along with the shares, Great Elm Group also issued something called warrants. Think of warrants as options to buy stock at a set price in the future. They issued two types. The first is the Series A warrant, which allows the buyer to purchase 1 million shares of common stock at a price of $3.50 per share. This warrant is valid for 10 years, but they can only start using it after 1 year from the date of the deal. Then there's the Series B warrant. This one also gives the buyer the right to purchase 1 million shares of common stock, but at a higher price of $5 per share. Again, with a 10-year term, this one is even more restricted as the buyer can only start exercising it after 3 years from the original issuance date. Both of these warrants were also part of that private placement, meaning they were sold directly to Woodstead Value Fund and are exempt from public registration. It's also important to note that these warrants have something called anti-dilution adjustments. This is a protective clause for the warrant holders. If Great Elm Group were to issue more stock at a price lower than what's set in the warrants, these adjustments would lower the exercise price of the warrants to protect the buyer from being unfairly disadvantaged. The company also put out a press release on the same day, August 27th, to announce this whole transaction. This is standard practice to make sure the public is informed about significant corporate events. The details of this press release are included as an exhibit to this report. Now let's step back and look at the bigger picture here. Great Elm Group is essentially raising capital through a private placement of stock and warrants. This move brings in $9 million, which can be used for various purposes like funding operations, expanding the business, or paying off debt. The fact that a significant investor like Woodstead Value Fund is putting this much money in and securing a board seat suggests they have confidence in the company's future. However, we also see the issuance of warrants. While these bring in capital if exercised, they also represent potential future dilution of existing shareholders. If the stock price goes above the exercise price of the warrants, the buyers will likely exercise them, meaning more shares will be outstanding. This could dilute the ownership percentage for current shareholders. The appointment of Booker Smith to the board is a direct consequence of this investment and signals a closer relationship between the company and its new major shareholder. This can be a positive thing if the investor brings valuable expertise and strategic guidance, but it also means the company's decisions might be more heavily influenced by this single investor's interests. Looking at the company's filings on its stock and note registrations, we see they have common stock traded on the Nasdaq as GE and also have 7.25% notes due 2027. This indicates they are an actively traded company with a mix of equity and debt financing. The current deal seems to be aimed at strengthening their financial position, likely to support their ongoing business activities and debt obligations. In my opinion, this move by Great Elm Group is a strategic one. They're bringing in much needed capital and gaining a more involved, experienced partner in Woodstead Value Fund. The potential for future dilution from the warrants is a risk to keep an eye on, but the immediate cash infusion and the board seat for the investor suggest a strong near-term vote of confidence. The company's direction seems to be leaning towards growth and stability, with a clear focus on meeting its financial commitments and potentially expanding its reach, especially with Mr. Smith's real estate and credit background. The key will be how effectively this new capital is deployed and how the company balances the interests of its new major investor with those of its existing shareholders. Alright, that's our breakdown of Great Elm Group's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord community in the description below for more exclusive content and discussions. Thanks for watching. See you next time.